Here is a list of the top highest valued startups in the world. And you can see that some of the most valuable and successful startups in the world, such as Uber, Airbnb, and SpaceX, all of them are based in the US, and most of them are based in China. While there are very few startups based in Europe, despite having a bigger population than the US. Now, if you're an entrepreneur or just interested in the tech industry or economics, you might be wondering why it seems like the US has such a strong startup scene compared to Europe. Why, despite having a population that is more than twice as large, are there so few startups in Europe as compared to the US? Well, there are a few reasons why that must be the case. So, let's talk about them. One reason is that the US has a more developed venture capital ecosystem. It's easier for startups in the US to raise the capital they need to grow and scale. In contrast, European startups may have more difficulty accessing funding, especially in the early stages. Firms in the US get access to their funds within a month, whereas startups in Europe may have to wait up to 6 months. If you look at the funding, a report by the National Venture Capital Association and PitchBook tells that the venture capital investment in the US reached a record high of $131.9 billion in 2019, while investment in Europe was just $22.7 billion. Previously, 6.5 billion euros, $8 billion, in venture capital were invested in the EU in 2016, which is a small portion of the approximately 40 billion euros invested in the US over the same period. That is a huge difference. Additionally, while writing a check, European investors are dubious and cautious. The future expansion of the company is less important to them and are fixated on future returns. And there's a huge contrast compared to US, where investors are more concerned with growth than they are with generating immediate money. 2. Another reason for this is market size. Since the US market is huge, successful businesses there may be able to attract more clients and make more money, and this has increased the US's appeal as a market for companies. For instance, if you look at this graph, the US had a GDP of $21.4 trillion in 2020, compared to $20.9 trillion for the European Union, which is made up of various European nations. This implies that the total revenue made by US companies is probably higher than the total revenue made by European companies. Moreover, there is also a problem of fragmented markets. The numerous nations that make up the European Union have various languages, cultures, histories, laws, customs, ways of life, etc. It's possible that what works in Germany won't in France, so European entrepreneurs have to deal with their fragmented market. In contrast to the United States, which has a more homogeneous market, entrepreneurs who want to target the entire European Union must figure out a successful formula that works for the majority of the Union's member states. The development of many European companies has been hampered by the time and effort required to translate information into numerous European languages and comprehend their diverse audiences. However, the size of the market is not the only factor. Another reason is talented individuals. The U.S. has a sizable talent pool that can support the development and expansion of startups, including engineers, designers, and business professionals. In comparison, the skill pool in Europe could be smaller, which can make it difficult for startups to find the proper candidates. As an example, consider the fact that Silicon Valley in the U.S. is home to many of the top tech companies in the world and draws top talent from all over the world as an example of the possible differences in talent pools between the U.S. and Europe. Europe, on the other hand, might have a smaller pool of highly qualified tech people. According to the World University Ranking 2018-2019, 7 of the top 10 universities are in the U.S. and 3 are in Europe. So, universities in Europe lag behind their American counterparts. This has contributed to a shortage of talent in Europe as many smart people opt to further their education in the U.S. over Europe. And there is also a question of culture. The U.S. has a culture that is more supportive of taking chances and innovating, which may appeal to business people and support a thriving startup sector. When compared to Europe, the U.S. has a higher proportion of high-growth corporations, those that have had quick expansion in their sales or employment. And in comparison to the U.S., fewer unicorns, startups valued at over $1 billion, have emerged in Europe. Moreover, according to a survey by the European Investment Fund, European startups are less likely to scale up and internationalize. European businesses lack the size and flexibility necessary to compete with their American and Chinese rivals. Europe's ecosystem has been less successful at transforming startups into large state successes. Finally, we can't forget about government support. The U.S. government offers cash, tax benefits, and access to resources like patent protection, among other sorts of assistance to entrepreneurs. For instance, the Small Business Administration, SBA, provides a variety of services and programs such as loans, grants, and mentorship to assist new businesses in getting off the ground. In contrast, European governments might not encourage startups as much. So, there you have it, a few reasons why the U.S. startup scene might be stronger than the European one. But one thing important to note here is that this does not imply that Europe doesn't have its own successes. Companies like Spotify, Deliveroo, and Klarna are all European startups that have made a big impact. And Europe has long been aware of its technological shortcomings and has recently launched a flurry of initiatives aimed at putting the region on a higher performing path. The EU has been working to foster greater technological cooperation among European nations, for instance, by establishing joint ventures and international alliances. The overall objective of these programs is to assist Europe in creating a robust and cutting-edge technology industry that can rival those of the US and China. Individual European nations are also making research and development (R&D) investments and fostering the expansion of startups through initiatives like seed funding, accelerators, and incubators. And the overall objective of these programs is to assist Europe in creating a robust and cutting-edge technology industry that can compete with those of the US and China. So, what do you think? How long will it take Europe to catch up to the US and China? Please share your opinions with us in the comment area below. And if you enjoyed this video, be sure to give it a thumbs up and subscribe to our channel. We'll see you in the next one. Thanks for watching.